Well, our next guest warns the market's record momentum could stall around Thanksgiving. Mike Wilson is Morgan Stanley's chief U.S. equity strategist and chief investment officer. Mike, it's always great to speak with you.
Great, thanks.
Your note, fire and ice. We're entering the icy period. So what sparks that?
Yeah, I mean, look, this is a difficult time. We've had this fire and ice narrative now for really a couple of months, and the fire part has played out. Everybody's focused on the Fed this week, as they should be. I mean, this is a big change, or they've telegraphed it well. And look, part of the sell-off in September, we think, was directly a result of the Fed, talking more hawkishly. Right, rates went up, and multiples came down, and we got a whopping 7% correction. And we backed off on the ICE portion kind of at the beginning of October because the market stabilized. And we do a lot of work looking at flows like everybody. And we noticed that the retail community is just, been coming in with a vengeance and continues to come in with cash. And it was again today. So that's a seasonal feature, we think, because, institutional managers will also want to stay fully invested through this, through the holiday period, the Santa Claus rally, as you call it. And we think that could last all the way till year, and we do. It might last till Thanksgiving. We don't know. But what I want to make clear today, and we try to make clear in our notes, is the ICE portion of our narrative has not played out yet. So we just have a different view than most people. We don't think growth is going to reaccelerate, into the first part of next year, particularly for earnings, for a lot of the reasons you all were just talking about. One is supply chain issues and costs. Some companies are missing sales outright because they can't even get the supply. That's another problem. But we think there's actually an inherently a demand problem ultimately as well. There is going to be a bit of a fiscal cliff no matter what happens in Washington, just on a comparative basis to next year. And we just got to work through all that. All right. So it's not the end of the world. Expectations are pretty lofty. Valuations are really stretched right now. And so we think that ICE portion is going to play through into the first quarter. And look, it's always about picking the right stocks and sectors anyways for us. I mean, that's what we try to do. And right now we would say you want to lean a little bit more defensively, things like healthcare, which is cheaper growth. Some parts of technology still look fine to us, but not the whole bucket. And then financials should work into the end of the year if rates go up with the Fed's move this week.
Right. I think anybody who puts forth sort of a more bearish thesis on the markets, Mike, gets the pushback of the consumer is in great shape. The consumer has saved up a lot of money, ready to spend. There's going to be spending unleashed. The chart in your note over the weekend was fascinating to me, showing where personal savings are right now. Back to pre-pandemic.
Yeah, it's a little known fact, I guess. But I mean, look, there are two things going on. First of all, we had an incredible stimulus over last year, and that did help spending. We know that. Everybody knows that consumer goods, we probably overconsume there. That's one area we definitely want to try to avoid. Consumer services may benefit as we transition to the reopening for the fourth time and people spend more on services. I think that will happen. But ultimately, it's about how much money does the consumer have to kind of keep at this rate. They have been spending at an above trend rate when you combine the two. And we do think personal savings now are back below where, pre-COVID levels. And the data shows that. Where we could see an offset is with the wealth effect. Okay, so that chart that you cited does not include things like stocks and real estate and maybe cryptocurrency assets. And that's a big positive. One thing I would say is that money is pretty concentrated probably in the upper quartile of the population. And those folks, they're probably not going to spend it as much as somebody in the lower end cohort where there's a higher propensity to spend. So that's the setup. I mean, I think we get a strong holiday spending season because of that wealth effect. But I think after that, then you have a risk of a real surprise in the downside from a demand standpoint as those stimulus checks and things that we did this year wear off.
Hey, Mike, it's Karen. Thanks so much for being on. Always love hearing what you have to say. I'm wondering on your thoughts about maybe Thanksgiving or end of the year is kind of the end of that bull run. Is there something sort of structural that would change the tone that would, make people more bearish?
No, I don't think there's anything, I don't think there's a single smoking gun. I think there's a bunch of things that you could say that line up. And I think a lot of folks are surprised that we're trading here, but nobody wants to fight the momentum. So it's really that simple, Karen. I think the price momentum, if it starts to fade, I think you'll see more supply. And the structural thing I would say is more seasonal, right? Typically as you go into a new year, the clock starts again, particularly for asset managers. And, they may decide, okay, this is a time where I do want to take some risk off because I see the same thing that maybe I'm talking about. And a lot of clients we speak to are saying that, but they just don't want to abandon ship too early. So that's the structural part. It's a seasonal dynamic. and that lends itself to kind of a tougher Q1.
Mike, always great to see you. Thanks so much.
Thanks for having me. Mike
Wilson, Morgan Stanley. Brian Kelly, I mean, so Shibcoin might save Christmas at this point? I mean, personal wealth is going to help the consumer out.
Yeah, I mean, listen, I actually think there's something to that. I mean, we know that Robinhood has been knocking the cover off the ball. We know that, when we talk about Wall Street bets, that is kind of our quote-unquote retail trader. Now, I know they might get upset at me for saying that, but the point is, I do think there are plenty of people out there that have made money in crypto, that have made money in stocks, that are living off of that right now. And if I had to think about what is going to be that smoking gun that you asked about, it is probably that the consumer spending declines right after Christmas. That's what you see. Everybody spends, this is going to be a big Christmas, and then it just goes into that ice period that Mike's talking about.
Yeah, I think what was interesting about Mike's commentary, Tim, is that he was talking about this ice period, but we've got enough of sort of all of the ingredients needed for a rally into year-end, and institutional money wants to stay pretty much invested to year-end anyway. So like this show can keep going.
Yeah, and look, who didn't read that note and think about the great Pat Benatar song, Fire and Ice, where you come on like a flame and you turn a cold shoulder.
I didn't.
And that's where we're going with. Yeah, well, I think you're going to go home tonight and listen to that song. But the cold shoulder is going to be turned by the Fed, or really the valuations, because what Mike didn't get a chance to get into is really just the mechanical element of where higher rates are going to bring down the valuation of the market. And that's not something anyone's going to do until next year. So, look, I would not be betting that the Fed is going to step in here. Would I be betting that markets are starting to move yield curves around the world? There's no bet. That's happening. But the dynamic right now for liquidity is still way too strong. And I'll tell you, we're going to look back on Christmas 2021, and that may have been the greatest era for the consumer, coming out with higher wages, with a lot of gains in asset prices, and a world that really just doesn't care and is looking to kind of exhaust that last bit of spending. But I think it's going to be a difficult year as we get into next year, and I would not challenge the market to push back too hard right now.